Hey there, teachers and public employees. Welcome to the Public Employee Retirement Training Channel, where we help public employees like you prepare and plan for retirement and stay financially well along the way. In this video, we're talking about Trump's new tax law. It is officially signed, so if you're retired or planning to retire soon, you have a powerful 4-year window to act. This may be the biggest tax planning opportunity of your lifetime, but the clock is already ticking. In this video, we'll break down what's changing, what's staying the same, and what you can do right now to protect more of your retirement savings from the IRS, as well as what this new law means for teachers and public employees, so make sure you stick around until the end of the video. So what is this new law? In 2025, Trump's One Big Beautiful Bill includes a temporary tax deduction of up to $6,000 for seniors age 65 and older, aiming to reduce the tax burden on Social Security benefits. This deduction, effective from 2025 to 2028, is available to those with a modified adjusted gross income of $75,000 or less for single filers, or $150,000 or less for those married filing jointly. The deduction phases out for incomes above these thresholds. While the bill doesn't eliminate taxes on Social Security, it significantly reduces the number of retirees who owe taxes on their benefits. Here's a more detailed breakdown. Senior deduction. The bill includes a deduction of $6,000 for seniors age 65 and older, reducing their taxable income thresholds. The full deduction applies to individuals with a modified adjusted gross income of $75,000 or less, and couples with a modified adjusted gross income of $150,000 or less. Phase out. The deduction phases out at a rate of 6% for incomes above the thresholds, and it is completely phased out for single filers with $175,000 in income and joint filers with $250,000 in income. Impact. The White House says this provision will result in 88% of seniors not paying taxes on their Social Security benefits. Not a tax elimination. While the deduction significantly reduces the tax burden on Social Security benefits, it does not eliminate taxes on them entirely. Temporary provision. The senior deduction is set to expire at the end of 2028. On a quick side note, for more help and insight, check out our book, The Retirement Roadmap for Teachers and Public Employees, a complete and comprehensive guide to plan for retirement and be financially well throughout your career. Available on Amazon in both Kindle ebook and paperback. If you want to learn more about public employee retirement training or improve your financial literacy, create a financial plan for yourself and your family, or start planning for retirement but are not sure where to begin, be sure to check out the resources in the description below. Now here is what the law changes for retirees. New standard deduction for retirees. The new law increases the standard deduction and adds a senior bonus deduction if you're over 65. For 2025 and beyond, a married couple over 65 could see deductions of more than $32,000, even if they don't itemize. That means more of your income can be tax-free. The senior bonus deduction. If you're 65 or older, you get an extra deduction on top of the standard deduction, roughly $1,950 per person, or $3,900 per couple. This reduces your taxable income and could push you into a lower tax bracket. But there's a catch. This benefit phases out after 2028, so you have just 4 years to plan smart. Now here is why this is a fantastic Roth conversion opportunity. Here's where the planning gets exciting. Tax rates are lower for now, but are scheduled to go back up in 2029. This creates a rare chance to convert pre-tax retirement money, like from a 403b, 457b, 401k, or traditional IRA, into Roth accounts at historically low tax rates. Why Roth conversions make sense now. You pay lower taxes now on the conversion. You create tax-free income for retirement. You avoid RMDs or required minimum distributions from Roth IRAs, and you reduce your taxable Social Security income later on. What this means for teachers and public employees. If you're a teacher or public employee, this window could be even more valuable. Many public employees don't pay into Social Security or have mixed retirement income from pensions and deferred comp from 403b and 457b plans. This new tax law helps you strategically spread out taxable income, especially if your pension pushes you into a higher tax bracket. Roth conversions now could help reduce future IRMA surcharges on Medicare and taxation of your Social Security or pension income. And if you're still working and over 59 and a half, you might be able to do in-service Roth rollovers, another overlooked opportunity. What you should do now. Here's how to take advantage of this short window. Run a retirement income plan to project your tax brackets from 2025 to 2028. Identify Roth conversion sweet spots, where you can shift taxable money without jumping brackets. Consider pairing Roth conversions with qualified charitable distributions, QCDs, or other tax-smart giving. Talk to a professional who understands public pensions and 403(b) and 457(b) rules. Retirement tax planning isn't just about this year, it's about your lifetime tax bill, and this 4-year window could save you tens of thousands of dollars in taxes. If you're a retiree, or a teacher or public employee nearing retirement, now's the time to act. Hit that like button if you found this helpful, and subscribe for more retirement strategies tailored to educators and public workers. Don't wait until it's too late. Let's get your retirement plan working smarter, not harder. For more help and insight, check out our book, The Retirement Roadmap for Teachers and Public Employees, a complete and comprehensive guide to plan for retirement and be financially well throughout your career. Available on Amazon in both Kindle, ebook, and paperback. Stay informed, stay prepared, and here's to your bright future ahead. If you want to learn more about public employee retirement training, or improve your financial literacy, create a financial plan for yourself and your family, or start planning for retirement but are not sure where to begin, be sure to check out the Retirement Roadmap and other resources in the description below. We hope you found this video helpful. If you did, share it with a fellow teacher or public employee. Be sure to like, subscribe, and hit the bell so you don't miss any future videos. Drop your questions or any future videos you want to see in the comments, and thanks for watching.